Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on the semiconductor sector, which is getting hit pretty hard this past week. The bears have been in full control of the sector. So checking in on AMD, NVDA, and MU. AMD is losing the lower Bollinger Band support and dropping pretty rapidly on increasing bear volume, and we had a weak close, so this dump is not over just yet. We've got support down here. I'm looking at 1195 and 1204. So we're looking just around that $12 psychological level, and we've got the 100-day moving average support lining up there as well. The bulls really want to hold this level because looking back at the price action here in early February, you can see that after that $12 level, it's a long drop here down to the next level that we would be looking at, and really that'd be down at 1097. So bulls really want to hold this 1195 low because the breakout to the upside, we didn't really create much support between $11 and $12. So still weak, need a bullish reversal candlestick, but we need confirmation of that candlestick. We have been rejecting day after day from the exponential resistance, which shows a lot of weakness. Anytime we're riding above the exponential support or rejecting from it as resistance, that shows a really strong trend in that direction. So bears still in control of AMD. We confirmed the bearish reversal candlestick. We lost exponential support for the first time in over 2 months. We have a bearish MACD cross, a bearish TCG cross on the verge here, and that middle Bollinger Band on the weekly time frame is going to be in the 12 teens to start this next week. So that's another level that's important in the low $12 area. If we lose this middle Bollinger Band, it will be the first time in about 13 months that that level would be resistance. So that is a key level that the bulls are going to need to hold this coming week. NVDA is just as weak, if not weaker, where we lost key support and we are at the low of the day. The close on Thursday was at the low. So the must-hold level is 95.17, and the weekly chart will show us why in just a moment. But it's the same scenario where we are rejecting from these exponential resistances and seeing a lot of weakness with the inability to see any bullish reversal candlesticks confirmed. We have the bullish reversal hammer, no follow-through, rejection from the exponential, bullish reversal candlestick, no follow-through, rejection, and now a close at the low of the day, giving all that bear momentum. So why 95.17 is so important is because we have a double top at the all-time high. We pulled back. We then formed a lower high, and if we break 95.17, the low of this consolidation, that's a lower high and then a lower low. And that would shift momentum and put the bears in full control. We have a bearish TCG cross. We lost the middle Bollinger Band for the first time in over a year. And after 95.17, we're looking down at 87. Actually, let's look at previous resistance. 95.13 was a previous all-time high, so previous resistance acting as support on that consolidation. And I would be looking down at 87.43 as the next weekly price action point after 95.17. So because we move so rapidly to the upside, there are some big jumps on the way down, so the bulls need to form a bullish reversal candlestick on the weekly time frame. The sooner the better, because 95.17 is likely to be tested on Monday, and losing that level would be a red flag. MU bulls were stronger on Friday than the other two. Not really a ton of follow-through. We had an upper wick of profit taking. We are positioned better on the daily chart than the other two, and we filled the gap back to the downside at 26.49. We have a higher low, higher high pattern still certainly in play here, and we're watching exponential resistance as well. But as long as the bulls form a higher low compared to 24.81, the uptrend on the daily time frame is intact. So you can see on the weekly time frame we are pulling back, but we're nowhere near the middle Bollinger Band that the other names have lost. Granted, there's a lot more previous price history resistance in MU. AMD and NVDA were coming off of all-time highs. Not the case for MU, but we still have exponential support. The red flag is the increase in bear volume that does show downward momentum, but we do still have a bunch of support levels built on the way up, along with that middle Bollinger Band on the weekly. So if I had to be bullish in a name, it would be MU right now, looking at this daily chart. chart, but obviously I would rather be bearish in these names or not in them at all, just waiting for a bounce to begin to play out. So keeping a close eye on the sector, watching the hourly timeframes, because the hourly timeframes, especially on NVDA, we traded a lot, they indicate these short-term hourly oversold bounces, and the bounces haven't led to any follow-through on the daily time frame, but there have been some decent gains on those hourly bounces to be watching. So that's what we're watching, the hourly RSI, to see when it gets oversold and to know when to start looking in the other direction. And we've had a pretty decent success rate of buying gap downs on a pullback, and that's when we see the RSI on the hourly down right around the oversold level, just below 30, and we start the day with a quick flush to the downside on a gap down open. That's when we know to be looking for a bullish entry, because the RSI level was already oversold before the gap down and pushed to the downside. And we made that play on Tuesday here, where we had the gap down open after 2 big bearish days, and we saw that nice little short-term bounce. So we'll keep checking in here on the weekends. I appreciate you watching, and we'll see you soon.